Here is a summary of Intel's Q3 2025 earnings call transcript, presented in a concise and readable format for an audio delivery. Intro music fades. Host: Thank you, Jonathan. And good afternoon, everyone. We're here today to discuss Intel Corporation's third quarter 2025 earnings. Joining us are CEO Lip-Bu Tan and CFO David Zinsner. Lip-Bu will begin with an overview of our results and strategic progress, followed by Dave's financial deep dive and our outlook for the fourth quarter. Please remember that our forward-looking statements are subject to risks and uncertainties, and we'll also be referencing non-GAAP measures. You can find more details in our earnings release and SEC filings. Lip-Bu Tan, CEO. Thank you, John, and welcome, everyone. We delivered a solid Q3, exceeding our guidance for revenue, gross margin, and earnings per share. This marks our fourth consecutive quarter of improved execution, driven by growth in our core markets and steady progress in rebuilding the company. Key highlights for Q3: strengthened balance sheet, a major focus. We significantly improved our cash position and liquidity through accelerated U.S. government funding, investments from NVIDIA and SoftBank Group, and the monetization of portions of Altera and Mobileye. This provides us with greater operational flexibility. Strategic partnerships. We're honored by the trust placed in us, particularly by the U.S. government, highlighting Intel's unique position as the only U.S.-based company with leading-edge logic R&D and manufacturing. Tangible execution progress. We're on track to right-size the company by year-end, evolve our talent mix, re-establish an engineering-first mindset, and optimize management levels. Employee energy and collaboration are increasing as more return to the office. Underlying business trends and AI focus. x86 franchise. The core x86 architecture remains critical in the AI age. AI is accelerating demand for new compute, fueling renewed growth in traditional compute, and providing near-term upside for Intel. Its compatibility, security, and flexibility position it well for hybrid AI workloads, especially at the edge. NVIDIA collaboration. We're joining forces to create a new class of products, connecting our architectures to NVIDIA's NVLink to accelerate AI adoption across markets. This partnership aims to unlock innovative solutions for the AI platforms of tomorrow. Central Engineering Group. To accelerate our efforts, we've created this group to unify horizontal engineering functions, drive leverage in IP development, and eliminate duplication. It will also spearhead our new ASIC and design service business. Client computing. We're on track to launch our first Panther Lake SKU by year-end, followed by additional SKUs in early 2026, aiming for our strongest PC portfolio in years. Server business. AI workloads are driving refreshes and capacity expansion. Granite Rapids is seeing strong demand, with a focus on performance per watt and TCO. We are working to regain market share by improving multithreading capabilities. AI accelerator strategy. We believe we can play a significant role in inference workloads, which we see as a larger market than training. We aim to be a compute platform of choice and will partner strategically. Near term, we'll deliver AI capabilities across our existing product lines, with successive generations of inference-optimized GPUs planned annually. Intel Foundry. Momentum and progress. Steady progress on Intel 18A, with Panther Lake on track. Fab 52 is operational, and Intel 18AP work is advancing. Intel 18A is foundational for multiple generations of client and server products, and is critical for driving wafer volumes and investment returns. Customer engagement. We're encouraged by early feedback on Intel 14A from potential external customers. Advanced packaging. EMIB and EMIBT continue to progress well. Market opportunity. The rapid expansion of AI infrastructure is creating unprecedented demand for wafer capacity and advanced packaging. Intel Foundry is uniquely positioned to capitalize on this, with disciplined investment focused on capability and scalability. We will only add capacity with committed external demand. Overall outlook: our strategy is focused on our unique strengths in the AI-driven economy. Our leadership is strengthening, our culture is becoming more accountable and execution-oriented, and our confidence in the future is growing. David Zinsner, CFO. Thank you, Lip-Bu. In Q3, we achieved our fourth consecutive quarter of revenue above guidance, driven by core market strength. While macroeconomic volatility remains, customer purchasing behavior and inventory levels are healthy, and industry supply has tightened materially. We are increasingly confident that AI is driving growth across our businesses. Q3 financial performance: revenue, $13.7 billion, up 6% sequentially and above our guidance. Capacity constraints limited our ability to fully meet demand. Non-GAAP gross margin, 40%, 4 percentage points above guidance, benefiting from higher revenue, a favorable mix, and lower inventory reserves. Non-GAAP EPS, 23 cents, significantly above our break-even guidance, due to higher revenue, stronger gross margins, and cost discipline. Cash flow: Q3 operating cash flow was $2.5 billion, with $900 million in adjusted free cash flow. Balance sheet strengthening: secured approximately $20 billion in cash through strategic partnerships and asset monetization, ending Q3 with $30.9 billion in cash and short-term investments. We also repaid $4.3 billion of debt. Segment results for Q3: Intel Products revenue, $12.7 billion, up 7% sequentially and above expectations across client and server, despite capacity constraints. Client Computing Group, CCG, revenue, $8.5 billion, up 8% sequentially, driven by a seasonally stronger TAM, Windows 11 refreshes, and a stronger pricing mix. PCI revenue, $4.1 billion, up 5% sequentially, exceeding expectations due to improved product mix and higher enterprise demand. Data Center: strength in host CPUs for AI servers and storage compute continued, though supply constraints were a factor. Our latest Xeon 6 processors, Granite Rapids, offer significant TCO savings and power efficiency. We are seeing customer interest in longer-term strategic supply agreements for AI infrastructure. Intel Foundry revenue, $4.2 billion, down 4% sequentially. We delivered Intel 10 and 7 volume above expectations and met key 18A milestones. Intel Foundry operating loss, $2.3 billion, an improvement sequentially, primarily due to a favorable comparison to Q2's impairment charge. All other revenue, $1 billion, including Mobileye, Altera, and IMS. Q4 2025 guidance: revenue, forecasted in the range of $12.8 billion to $13.8 billion. At the midpoint, revenue is roughly flat quarter over quarter, adjusting for Altera's deconsolidation. Intel Products expected to be up modestly sequentially, but below customer demand. CCG down modestly, PCI up strongly. Intel Foundry revenue up quarter over quarter, with increased Intel 18A revenue. Non-GAAP gross margin, approximately 36.5%, down sequentially due to product mix, the initial ramp of Core Ultra 3, and Altera's deconsolidation. Non-GAAP EPS, 8 cents. Gross capital investment for 2025, anticipated to be approximately $18 billion, with over $27 billion deployed in 2025 versus $17 billion in 2024. Closing remarks: we exit Q3 with a significantly stronger balance sheet, solid near-term demand, and growing confidence in our Core x86 franchise and long-term foundry opportunities. We recognize the work ahead to reach our full potential, and will focus on delivering long-term shareholder value. Q&A session summary. Key takeaways. Foundry confidence. Increased confidence in foundry is attributed to both product side announcements and strategic investments, e.g., SoftBank, alongside significant technical progress on 18A and 14A, with improving yields and customer engagement for advanced packaging. Gross margin trajectory, 2026 plus. While specific guidance isn't provided, expectations point to improvement driven by foundry economies of scale and a shift to leading-edge nodes, Intel 4, 3, 18A. Initial ramps of new products like Lunar Lake and Panther Lake will have higher initial costs, impacting margins in the short term. The absence of Altera's higher margins will also be a factor. Foundry investment and customer commitments. Intel is actively engaging with customers for foundry services, focusing on demonstrating yield, reliability, and IP. Investments are being made based on customer commitments, with a line of sight to utilizing existing assets and reusing equipment to meet demand. Supply constraints. Shortages are prevalent across Intel 10 and 7 nodes due to rising demand and limited capacity expansion plans for these older processes. This is also compounded by industry-wide substrate shortages. The company is working to guide customers towards alternative products. Q1 seasonality. The company anticipates being very tight on supply in Q1, potentially at its peak shortage level, and does not expect to buck the usual seasonal trends. Improvements are expected later in the year as supply catches up. Investment focus. With a strengthened balance sheet, the primary focus is debt reduction. Capital expenditures will remain disciplined and tied to demand, with potential for strategic investments in high-return opportunities. 18A capacity and yields. While 18A yields are on track to meet year-end goals, significant margin accretion requires further improvement, expected through next year. Capacity additions for 18A are not anticipated to increase significantly in the immediate term, but volume will ramp over the next year. ASIC and design services. The central engineering group will drive ASIC design, extending x86 IP reach and delivering purpose-built silicon for cloud and system customers, supporting AI growth. Intel 14A. Customer engagement and confidence in 14A have increased since the previous quarter. NVIDIA relationship. This is a critical, multi-year collaboration focused on creating new product classes by connecting Intel CPUs and NVIDIA GPUs. It's seen as an incremental opportunity to expand the TAM, not cannibalize existing business. AI inference strategy. Intel aims to play a significant role in the inference market by revitalizing its x86 architecture for purpose-built CPU and GPU requirements, focusing on efficient power management for agentic workloads, and partnering with incumbents and emerging companies. Gross margin drivers. Moving away from older processes, 10, 7, to newer ones, like 18A is expected to lead to a meaningful improvement in foundry gross margins. Product competitiveness and cost structures in both client and data center segments are also key areas of focus for margin improvement. Data center roadmap. Diamond Rapids feedback is improving, with a focus on the new product Coral Rapids, which will include SMT and multithreading for higher performance. The roadmap is being defined as execution progresses. Future integration with NVIDIA. The current NVLink announcement is a starting point. Future integration opportunities beyond NVLink are anticipated as Intel defines its Crescent Island strategy for agentic and physical AI and other inference developments. Outro music begins. Host. Thank you, everyone, for joining us today. We are on the journey of rebuilding Intel and are making solid progress. We look forward to providing another update in January. End of transcript summary.